Here's a look at the latest events happening in financial planning. Brought to you by JenniferLangFinancialServices.com, where we help American workers and small business owners prepare and protect their retirement portfolios from stock market loss. We specialize in annuities, 401k and IRA rollovers, indexed universal life insurance, and small business owner 401k retirement plans. Please remember to click the like button and subscribe to catch all of our financial news and retirement planning updates. On December 20th, 2019, President Trump signed the Setting Every Community Up for Retirement Enhancement Act into law. This bipartisan legislation, which had been in the works for several years, seeks to further promote access to retirement income within the 401k market. An important aspect of this act is a safe harbor provision for the selection and use of annuity products underwritten by insurance companies. This provision was added to the Employee Retirement Income Security Act of 1974 in Section 404E and is called Safe Harbor for Annuity Selection. This safe harbor was considered essential given that many plan sponsors have been reluctant to use in-plan annuities due to possible liability issues should an insurer selected to underwrite an in-plan income annuity later become insolvent. While it was hoped that this safe harbor would provide an impetus for more defined contribution plans to begin introducing in-plan annuity options, this has yet to occur. Certainly, the onset of the global pandemic in early 2020 acted as a brake on new initiatives, but a long-ingrained reluctance on the part of plan sponsors to introduce retirement income solutions is likely the larger factor. That, however, may be changing. A recent survey from TIAA shows that nearly 9 in 10 plan sponsors who do not offer in-plan guaranteed lifetime income annuities are at least somewhat interested in offering them, and that 3 in 4 plan sponsors are extremely or very interested in a target date fund that allocates a portion to lifetime income. Given the growing interest in the integration of annuities into defined contribution plans, we thought it timely to provide guidance around how plan administrators might best choose from among the growing number of investment options that embed in-plan annuities. To this end, it is our suggestion that plan administrators, after making the business decision to include an annuity option in a defined contribution plan, adopt something along the lines of the following two-step approach to selecting the most appropriate program. Number 1. Establish a compliant insurer selection process, as clearly defined by the safe harbor in the Secure Act legislation. Number 2. Once a list of acceptable carriers is determined, establish a compliant product selection process to select the best program offered by one or more of those insurers. At first blush, the Secure Act safe harbor for insurer selection appears fairly straightforward, providing immunity from legal action if a plan sponsor selects an annuity carrier with the following attributes. Number 1. It is licensed to offer guaranteed retirement income contracts. Number 2. At the time of selection and for each of the preceding 7 years, it operates under a certificate of authority from its domiciliary state, has filed audited statutory financial statements, maintains reserves which satisfy statutory requirements, was or is not under an order of supervision, rehabilitation, or liquidation. Number 3. Undergoes a financial examination by its domiciliary state at least every 5 years. But such a reading would misconstrue the intent of the safe harbor, which is captured in Section 204. This clause states up front that a fiduciary must engage in an objective, thorough, and analytical search for the purpose of identifying insurers from which to purchase such contracts. In short, the Act is asking fiduciaries to act in a prudent manner to identify a suite of insurers that can best meet the obligation of providing long-tail income annuities. Only after identifying this subset of insurers can the easier tests outlined above be applied. A consensus is building among experts in the defined contribution industry that the safe harbor language implies that a plan fiduciary must have a prudent process by which to address this two-part test. The need for the process will not be new to plan sponsors who have long been advised by counsel and pension actuaries that this approach, together with thorough documentation, is the best protection against lawsuits around investment selection, plan fees, etc. At JenniferLangFinancialServices.com, we work with over 25 of the top-rated life insurance carriers, and our service helps small business owners meet the standards of an objective, thorough, and analytical vetting of insurance companies, both as regards to their ability to offer annuity products to the retirement market, as well as their relative financial condition over time. Once a suite of appropriately vetted carriers is isolated, it is time to focus on product or program selection. As mentioned, over the last several years, an increasing number of investment offerings have come to market that include the use of annuities for lifetime income. While there is no specific safe harbor for the selection of offerings, the Secure Act legislation does suggest that a cost-benefit analysis be undertaken at the time of product selection. In addition, previous safe harbor language from 2008 provided guidance around the selection of both insurers and the contracts they offer. Legal experts believe that this previous guidance will continue to have a bearing on current practices. While an agreed-upon industry standard for what constitutes an appropriate product evaluative process for fiduciary advisors is still forming, here are some suggestions. Step 1. Determine whether an in-plan or out-of-plan annuity better meets the sponsor's needs. Step 2. If in-plan, determine whether auto or affirmative election is a better approach for this plan. Step 3. Based on the outcomes of Steps 1 and 2, evaluate which solutions involving annuities are best to offer. With today's market offering ever fewer safe investment returns that can outpace inflation, the pooling protections available through insurance products should prove increasingly valuable to a retirement portfolio. Furthermore, securing protections through a trusted source that can access favorable institutional pricing, such as an employer, may become even more valuable to the next generation of retirees. Given this, both employees and employers are beginning to acknowledge the importance of offering annuity products in their defined contribution plans. Thankfully, the Secure Act now offers additional protections, enabling employers and their fiduciary advisors to connect employees with efficient annuity solutions. Insurers, in turn, have responded by rolling out a growing number of programs. Every business owner needs a plan for retirement. You've worked hard to achieve your successful financial standing. Now you are ready to reap the rewards of that financial success with a thoughtful, carefully planned strategy to help you achieve your financial goal. But just how do you do that, and is there a way to combine achieving your financial goals with reducing your current taxes? A 401k plan can be a powerful tool for a business considering a retirement plan. Explore a 401k today as a valuable option for your business. At JenniferLangFinancialServices.com, we offer custom plan designs that can favor the owner and/or the key employees of the business, complete documentation for establishing the plan, total ongoing service for the life of the plan, provided by our Pension Administration Department. Our administration services provide all government reports and quarterly participant statements, low administration fees, a large variety of investment options, a state-of-the-art daily valuation system offering 24/7, 365-day internet access to accounts, internet access to all aspects of the plan for the employer, free and flexible investment transfers, no surrender charges for death, disability, retirement, participant loan, or termination distributions. Visit us today and request a free small business owner retirement plan solution. It only takes 5 minutes to fill out the census. Get started today. Click the link in the description below or log on to JenniferLangFinancialServices.com/retirement income planning. Don't forget to click the like, subscribe, and share buttons to stay up to date on upcoming retirement and financial planning news.